Besides the noise coming out of Washington, debt, job numbers, political drama, something much quieter is happening unannounced. Capital is moving away from the US, trust is shifting, and Canada is suddenly part of that conversation. Tonight, I want to look at this from a Canadian vantage point. Not to gloat, not to panic, but to understand what's changing. I'll break it down for you into 3 parts. First, the US problem. Why USA's fiscal credibility is eroding. Second, the Canadian contrast. Why stability still matters to investors. And third, the implications. What this could mean for jobs, capital, and Canada's role going forward. From Canada, the American situation looks increasingly unmanaged. The US is facing a fiscal, economic, and job crisis, and it's not subtle anymore. According to their own Congressional Budget Office, their federal debt has now surpassed 38 trillion, and this trajectory is not sustainable. But the ridiculously high number of debt alone doesn't tell the full story. There is also the issue that there is no real enforcement mechanism in the US. Debt ceilings get suspended, deficit warnings get ignored, and fiscal debates turn into political theater instead of policies. For investors, that matters, because long-term capital, pensions, insurers, sovereign funds doesn't just look at growth, it looks at rules. It looks at discipline. It looks at whether governments correct course when things drifting. In the US, interest costs are now rising faster than almost any other category of spending. Within a few years, Washington will spend more servicing old debt than funding new infrastructure or innovations. That's a red flag, not because collapse is imminent, but because flexibility is disappearing and markets don't wait for collapse. They leave early. Now let's bring this home. Canada isn't debt-free, not even close. But very much like the EU, Canada operates under binding fiscal rules. Canada focuses on net debt, not gross debt, and that distinction matters. Canada's net debt to GDP ratio remains one of the lowest in the G7. More importantly, Canada still operates under fiscal anchors. They are not perfect, not always popular, but they exist. When deficits rise, Ottawa, unlike Washington, eventually has to explain how and when they come back down. That credibility reflects in borrowing costs. Canadian federal bonds consistently yield less than US treasuries of similar maturity. Not because Canada is bigger or richer, but because it's perceived as more predictable than the US. Yeah, let that sink in for a moment. And predictability is currency. That's why Canada has quietly benefited as global capital becomes more cautious. Canada offers commodity exposure, stable institutions, and lower political volatility. In uncertain times, that matters more than hype or flashy photo ops. Here's where things get uncomfortable. White House announcements, like job numbers, have become unreliable. They are overstated, imaginary, simply fake. Large headline gains are followed by massive revisions months later. In some cases, more than half of the jobs initially reported simply vanish after adjustments. In my opinion, exactly what you would expect from a conman. That erodes trust, and trust is everything in economics. When governments start to hide bad data or make up foreign investments out of thin air, investors take note. Trump's tariffs should have grown the job market. But in reality, manufacturing employment in the US has been shrinking, month over month. Then there is the Canadian difference. Canada doesn't pretend it can force outcomes without consequences. Mark Carney knows tariff raises costs, uncertainty delays investment, and capital finds alternatives. Mark Carney acts accordingly. That's not ideology, that's math. That's why global investors have been reducing US bond exposure, diversifying reserves, and hedging currency risk, and looking towards Canada and Europe as alternatives. Even the US dollar, long treated as untouchable, has weakened against major peers. Not dramatically, but persistently. And persistence is how trends begin. And the why can't be honestly a surprise. The orange conman in the White House is economically and politically absolutely illiterate and characterly obstipated. Trump is a serial bankruptcy and convicted felon with 34 counts of business fraud. His only motivation for office is to keep him out of jail and make as much money of his grifts as possible. He is not interested in the well-being of the American people. So no one should be surprised about the current and predicted state of the United States. This is why, while countries all around the world dump US bonds, foreign investors line up to make trade, security and defense deals with Canada. Because when global capital is becoming more selective, countries with stable rules suddenly matter more. Our government is led by a trained and very well-versed economist who understands opportunity and responsibility, Mark Carney. This is why, while countries all around the world dump US bonds, foreign investors line up to make trade, security and defense deals with Canada. Because when global capital is becoming more selective, countries with stable rules suddenly matter more. That puts Canada in a much better position than we ever have been. Now the real question is this. Does Canada recognize this window of opportunity and protects its credibility? Or do we take stability for granted? I'm genuinely curious what you think. Please leave your thoughts in the comments below. If you appreciate calm analysis without deflecting, please subscribe to the channel and share this video. Because economic shifts don't announce themselves. They unfold quietly and then all at once. Thanks for watching. I'm Wilfried Lemkuller with Europe Curious. See you in the next one.